As we approach the last month or so of the year, big questions are being asked about the US dollar. Let's catch up now from a technical point of view with Ron William from RW Advisory, who's been looking at this. And in fact, you produced a whole pack of charts talking about the dollar. And I know in just a minute we'll take a look at the intraday charts to get a better idea as to some of the precise technical analysis. But I'm interested to find out more about your thesis around where we are with the dollar as we head into the back of this year. What's the message that you're promoting at the moment?
That basically the dollar's trend is looking like it's exhausted and may actually reverse in the short to medium term. It's been difficult to call for a while because we've had some false signals into the 200-day moving average, which is our first chart. But it is still important to at least be aware of the change on the dollar.
Well, let's take a look at this first chart and you can get a better idea here as to where we are. This is a relatively short-term chart, isn't it?
Yes, so I mean, the first thing to point out is that we've had this bearish distribution pattern, what I call a three-strike bearish pattern, because we've had those three candlestick reversal checkmate kind of signals. That created a big selling climax. You can see the lower indicator there just showing us what we already see. The red bars are showing the consecutive number of daily selling pressure, so sellers overcoming buyers, and that's what led to the original break through the 200-day moving average. That failed thereafter, and it was a short position that I had which got stopped out in profit, so I was wrong on the extent of the trade, but still okay on the P&L side, and ended up giving a big powerful reversal signal back up. Now the big make or break level then and now is 98.40, and I already published this a while ago. We're now reversing from that level, going back into the 200-day moving average. So still one to look at with caution, but if we do sustainably break below the 200-day moving average, I would say on a weekly basis, to give us the real confirmation, then we really need to be adapting to a new change trade and possibly a pain trade that maybe the crowd is not positioned for on the dollar.
Just keeping this chart up for the moment and away from the potential to move below that 200-day moving average, just want to pick up on that bottom chart that you've got there, the buying selling climax. This is new to me. Explain more about this. Where's it come from? What's the background to it?
Yeah, so it's something I developed in recent years. And
so this is your own personal indicator?
Yes, it is. I mean, it's measuring the things that we already see in terms of impulsive moves up or down, but this is something I programmed on the platform just to actually show me in very clear statistical bars whether the market is showing any strong impulsive moves up or down. I like to use that just as an added confirmation for the price swings, but also the candle pattern moves that I see.
Okay, let's return to the chart and the price action. Chances of that break under the 200-day moving average, are you expecting that to happen?
Expecting it, but cautiously positioned for it, just because of the initial experience that we had of the failure below the average. The follow-up chart, I think, kind of serves the point a little bit more, because it shows on a long-term basis the trend has been our friend, and there is a line in the sand, which is the 200-day moving average. But the question, and some technicians, some traders may kind of think twice about what I'm about to say here. The trend is your friend, but of course there are times where that trend loses momentum and shows sign of a reversal. And the dollar is probably a prime candidate here because it's had a loss of momentum for so long. Yes, there are higher highs and higher lows still in place, so we have to stay true to Dow theory. But at the same time, let's also be aware that this 200-day moving average is starting to slow down, and there are signs of reversal here. Fundamentally, we have to break a weekly close below the 200 average at 97.57. I would also say 97, which is a value zone area on my probability distribution chart, just on the left. The other thing is, let's also keep in mind that the dollar is made up of currency components. Just back on the dollar, the target, if we were to break sustainably below 97, is for a big drop into 95. There's a price vacuum risk in there. So that's what makes this dollar trade such an important and attractive one if it's proven true. And on the weighting side, let's also keep in mind that if we get this correct, then it's a flip side trade for all of the dollar index components most notably the euro.
Okay, well, let's bring up the next chart, because the next one breaks it down into some of the component parts against the US dollar. And I mean, it's incredible actually to see the wide variation. There's been this big improvement in the Swedish krona, but a shortfall for the CAD against the US dollar. And you've reminded us as well, as you said, about these weightings, because I think that is important when you look at the way in which these component parts make up that bigger dollar basket.
Yes, well, when looking at any basket in terms of currency indices or even the stock market, S&P 500 or down, it really is critical to follow that top-down process through. So in the equity market, you start with the index, go into the sectors and stocks. Currencies, you're looking at the dollar index, look at the individual currencies. And particularly when the underlying index itself isn't giving clear signals, then it's even better to look at the individual components. And that's what's really proven very useful for me here. On a regular basis, I do look at price performance in this fashion and in other variations. What it shows, just very simply, is the best performing dollar currency within the index has been the Swedish krona, so that's the dollar outperforming the Swedish krona. I think it topped to 11% year to date, but is now currently 8 and a bit percent. And on the lower side, the worst performing dollar currency is against Canada. And in between, of course, no surprise is that red line there showing the cliff drop. That's the pound, which has had the big reversal against the dollar. So that's pound strength against the dollar. And in a way, that's been a double whammy, dollar weakness and pound strength, which has served the pound dollar further strength. Looking at the right side, what's very interesting is looking at the 1 month and 1 week time frame. So before we're looking at the line charts, looking at year to date, so that's the year as we're about to complete it. But looking at the 1 month versus 1 week, we can see there the green bar showing the 1 month dollar outperformance, that trend being our friend, but red showing loss of momentum in that friendly trend. And actually the best performing dollar currency, dollar Swedish, actually now the weakest in terms of weekly 1 week performance. So this is a very short term phenomenon that we're now seeing, but certainly one to jump on.
Yeah. Okay. You mentioned the fact that the euro is the largest component part of the dollar basket. Let's take a look at the euro dollar trade, which is your next one. If we can bring that up, and we can look at what you brought here. Back to price action. Nice and simple to understand here. We've got this nice little uptick for the euro against the US dollar over the last a week or so.
Yes, so as most traders will know, this is the mirror image of the dollar index because it's worth more than half of the weighting. And for that reason, we're seeing very similar price action here, except on this chart, I've drawn a regression trend, and you can see there the mean of that 2-year regression, which you can see there on chart B at the top of the panel. It's quite a big, strong trend, statistically measured. And that mean is where we've actually bounced off just very recently. We're still waiting for the trading averages, the exponential 8 and 20 to cross over again to give us a potential buy signal. We need to be aware of potential whipsaw or false signals because it is flipping from up again, having just given a sell signal recently. So we just need to be aware of the whipsaw action. But either way, the final confirmation will be that main 200 moving average and it confluencing with the regression band, and that's at 112. I think if we aim for 111.80 and 112, that's the key kind of zone that would confirm euro-dollar upside.
Yeah. How about the Japanese yen? I think it's the next chart that you've got. You've headed this up multiple price failures at 108.50. Clearly an interesting area to watch out for.
Yes, and maybe this will be, I think, a breath of fresh air just to see a clean chart for some traders out there, because dollar yen has been anything but. It's been going sideways, rather volatile. But what's interesting from just a price setup basis, it is actually respecting, or at least not able to get much above these key levels at 108.50 and also the 200 moving average, which is now flatlining at around 109. The key thing to watch out there again is the trading averages 8 and 20 exponential. For the short-term traders here, investors will need to look at the 50 to 200-day simple moving average.
Yeah.
But if you just look at the active moving averages, when we get a bearish sell signal on them, which we haven't had actually in the last few months, that would give a strong sell signal into the dynamic trend regression line at 107.50 and then 106.70, which is the second level on the probability distribution line. Last thing I'll say is the momentum indicators are also showing multi-month divergent signals, so that adds further credence on the bearish case.
Yeah, okay. Let's bring in a chart to sterling. This is obviously very important because, as you said at the top here, Brexit. And depending on the outcome of the elections, we could well get a really big steer potentially for sterling, either one way or the other. How are you reading this chart at the moment for the expected direction of sterling against the dollar?
Yes, so well, I'm fortunate to say this has worked out well for me since our last interview where we were looking for a low and then a recovery in the pound. Many people were citing kind of the Brexit noise as being the main story stealer here in terms of technicals versus the uncertain politics.
Yeah,
but
of course, you were with us actually, I think, in September when you called for long sterling, which I think is on the left-hand chart here, pretty much where you were at the bottom there, all the way down just around about the 120 level.
Yes, and just to make the clear point, the main positive sentiment there was the fact that the pound managed to hold above the 2016 referendum lows.
Yeah.
I think for anyone, whether you're a technician, trader, or an economist, that's generally a positive chart signal. And so, although the news was very uncertain and very negative, the price fact told us that it wasn't as bad in price terms as the low that was created post-referendum, which led to a 25% weekly drop. So that was a very emotional footprint in the sand, which we failed to break. And if anything, we powered much higher thereafter, and above the 200-day moving average, which is a strong enough benchmark signal by all standards. I think the other point that we must keep in mind on a long-term basis, if you look over the last 40 years of history on the pound, there is this very strong, resilient 8-year cycle, and that 8-year cycle most recently chimed in 2016 and is now creating a bottom process, which is clearly being confirmed by this impulsive move on the pound. So that's the backstory in terms of us holding the 2016 referendum low and the positive sentiment behind that, and then of course the 8-year cycle bottom adding further credence to a further upside on the pound. The initial target would be certainly above 131 and higher. We'll look at the range breakout as a minimum price objective. And then also let's keep in mind this isn't just pound dollar, so yes, pound strength and dollar weakness. This is also just broad pound strength, and that's why chart C there on the insert showing you the rising tide of pound against the rest. And actually the leaders are euro and the Australian currency in green and yellow, and just the red there, that's showing the pound and dollars. So it's actually trading in the average zone of that basket of currencies. So
yeah.
Euro and Aussie leading the way.
You indicated earlier on about the fact that the Canadian dollar was one of the underperformers against the US currency. Let's take a look at what's happening with the US dollar CAD, and it can be seen here, I think, this sort of chart.
Yes, so another messy kind of currency trade here, or currency trend I should say, sideways to negative, but again respecting this key value level at 133.10. This is one of the single kind of reasons I like to really use this probability distribution indicator, just because when the market's noisy and volatile and it's difficult to spot the clear price levels, this indicator usually shouts at you and tells you this is actually important. And often it's not the level that hits exactly the price area. Sometimes it oscillates around. And so this is something I would recommend to traders. Don't just look for the precise price level. Sometimes it's a zone, and sometimes the market oscillates above and below that level, as is the case for the dollar, Canada. So this is showing the dollar Canada oscillating above, as it did in the spring, below, and now it's actually failing beneath it at 132.80 and 133.10. That's the price zone I would suggest in terms of the 200 moving average and the value zone.
Let's move on and take a look at what's happening with the dollar against the Swiss franc. I'm interested in this for no other reason other than the fact that we got this parity that so many people talk about when currencies meet one-to-one. And as you can see here, we've just been trading below what you identify as a psychologically important level, that one-to-one for the dollar against the Swiss franc.
Yes, so big round numbers or parity is always the most psychological of all the numbers out there, and it is proving so for the Swiss franc against the dollar. And we can see there it's a zone, so it's one parity is clearly the top side, but on the lower side, based on the statistical indicator, 99. So it's a big number, and you can see that actually that's reflected in the sideways volatile range that we've seen on dollar Swiss. So it's been oscillating within there, and just kind of slicing through the middle is the 200 flat moving average again. So you can see here the 200 moving average is really serving as a make or break level across all the dollar components. And the key thing there is for us to break below 19, or either to, of course, to stay capped under 1. If we break above 1, then this thesis gets weakened. Yeah, all bets are off, and dollar Swiss actually probably goes up to just 101, just below that. Otherwise, a break below 99 would suggest a big figure and a half lower on dollar Swiss.
Yeah,
it can move. It has a big kind of range.
Let's quickly move on to dollar SEK, because this was one of the better performers until the last week or so, when we've got that pullback in the Swedish krona. How are you pitching on this and trading this?
Yes, so I mean, definitely to tread carefully on this one, because it has been the best performing dollar currency according to dollar index components, and of course the trend remains our friend, and it's always dangerous to trade against the trend. Having said all of that, the trend is your friend until signs of reversal emerge, and this is what we're looking for here based on this top-down approach. We do need a confirmation on each of the trades, and we've had at least a bear signal on the 1st of November looking at the 20 moving average, simple moving average, and the 50-day moving average, so the monthly and quarterly average. That's a first sign of a trend change. We've also got the selling climax starting to increase. That's just showing the bear candles there on dollar Swedish actually being more meaningful and stronger. And of course, this is all within a multi-month distribution top as well. So we just need to have more of the same bearish sentiment. We need to really hold below 968, and ultimately that 200-day moving average 951, significant for the Swedish krona and all the other dollar components.
Yeah, let's take a longer term chart on this, because that 200-day moving average has clearly been, as you say, the trend is your friend until it isn't, basically.
Yes, and it has been our friend for 2 years, or just under 2 years. So I've seen many charts where you've got beautiful trends and it's been great to trade, but let's also keep in mind that at the latter stage of that friendly trend is an overcrowded trade. So by definition, it becomes a strong kind of reversal signal once we get the confirmation. One way of looking at that, and it's a simple thing that people at the trading desks can compute, is look at the spread either visually or statistically between your short to medium term moving average and then your medium to long term moving average. And that's what I've just done here on the lower side. So 20 and 50, the difference in the two is the tactical measure, and 50 and 200-day moving average, the difference in the two is the strategic measure. You can see tactical going down, green to red, strategic still up. So it's really important that we see multi-trend, multi-cycle analysis on the same screen, because sometimes our mind plays tricks with us on the behavioral standpoint, and it's really important to be able to catch the changes as they happen.
Yeah. Okay, let's take a look now at $3 charts. So I want to take a look at sterling, the Swedish krona, and also the Canadian dollar. I want to begin first of all with the currency. You rightly said that this is a Brexit currency. Now, you came in to visit us pretty much when we were at the bottom of this cycle, all the way down here around about the 120 level, and you were buying this at that time. And I think a lot of people, clients included, were saying, hey, what's this guy doing buying when we were down here? But in fact, it worked out quite a neat little trade.
Yes, I mean, of course, with any kind of extreme counter-trend trade, it's really important to have risk and money management very, very tight and in place, and that was the case then. But having said that, of course, they can be the best trades because you're basically betting against the crowd, and if you're right, it tends to be quite a big move. That was on the basis of the 2016 lower holding and also this 8-year cycle that I've been watching for some time, and you can see there just that aside, or in addition to it, we've had the pattern of high highs and higher lows proving true. And the key signal for trading, and certainly what I was using, was the exponential 8 and 20 crossing over.
The two blue wavy lines here, yep.
Yes, so the light blue and the dark blue. And essentially, that gave me the long trade initially when we actually spoke last time on the pound. The market then corrected, and it was that second crossover where I got back into the trade and stayed long ever since. Yeah. And I think here and now, we're in this sideways range. Think of it as a breakout pattern, so not a time to fall asleep at the desk because it's going sideways, especially with all of this election noise volatility going ahead. For those event risk traders out there that like to trade during these big Sigma events, it really is worth keeping this one in mind.
So a long trade at 129.30, 129.39, where would your stop be?
So it would be beneath the previous swing low. Would be a key area. It depends also on the risk side of things. For me, that would be the technical level. But I'd also suggest, for people who may be wanting to cushion, buffer that volatility that we're likely to see, whoever wins, Conservatives seeing as more the Brexit party win and Labour not. Either way, volatility will be guaranteed. So it's important to maybe lower down the leverage and just have wide stops in place.
Yeah, okay. Let's move on to the next one, where I want to take a look at what's happening with the Canadian dollar. As you've identified, this is the dollar CAD trade is one of the worst performing for the dollar component part of the dollar index, with the Canadian dollar the worst performing. And you can see here this trend. Again, you've got the 8 and 20 exponential moving average, a 200 simple moving average on here, which we've just broken through on this daily chart.
Yes, so the trading averages, the 8 and 20 exponential already gave us a short-term buy signal, but the real strong confirmation is the fact that we've broken above the 200-day. The one caveat I would say is, remember the chart that we looked at before with the probability distribution showed that we often oscillate around this level, and so far we've been failing below the 133.10 level. So that was the value zone level on my chart. So I would say 133.10 and the 200-day at
132.70.
132.70. So that 30 pip or 40 pip range is key for us to get past for dollar CAD to prove that it's got further upside. And of course, you've got the old highs there. If that range were to break up, then it wouldn't be a big move up. For now, my thesis is for dollar CAD down with a potential false breakout right here and now.
Yeah, okay. Final one with the dollar SEK, because the Swedish krona has been one of the better performers against the US dollar on this daily chart here. Today we've got a little bit of a break low, 960.75. But again, 200-day moving average holding up neatly.
Yeah, I would say for this, because it's been the strongest trend year to date in the dollar index component, we really must get a strong evidence of this trend failing. And that would be the 200-day line, not just because it's a benchmark indicator that so many people look at, but also because it's worked so well for almost 2 years. So we'd really need this to not work anymore, and for this line of the sand to be washed away with some impulsive bearish signal. So we already have the multi-month bearish distribution pattern. That needs to be confirmed, and I think the big confirmation would be a break below 95.21. Also, looking at the MACD on your chart there, you can see it's below the zero line, so that is generally a negative sign, but we need it to really push lower, and I would actually say to break below the MACD extreme set in July. That shows further bearish momentum.
Yep. Okay, Ron, we've got to leave it there. But thank you so much indeed for joining us with this look at the dollar basket and breaking it down into those component parts. If you want to catch up with more from Ron and some of those indicators that Ron puts on his charts, those that he puts together, I'm sure he'll entertain any questions he has on and through his website. That's Ron William from RW Advisory.